Meanwhile, Tropical Storm Isaac is barreling towards the Gulf of Mexico, where the U.S. gets much of its energy. The storm has forced oil companies to halt production and close refineries. And as Diane Estabrook reports, the shock waves are already traveling through the supply chain.
Just in time for the Labor Day travel weekend comes Tropical Storm Isaac and the threat of soaring pump prices. But energy analyst Kimberly DeBoer says she's not panicking.
We are currently well supplied. Production's on the increase. We're actually producing more oil than we have in a decade. So from that level, there's not a lot of supply risk for over the medium term.
Right now, the U.S. is sitting on 360 million barrels of oil. That's about 9 million barrels more than we had a year ago. And the government says that is well above the average for this time of year. Still, tropical storms and energy markets don't mix. The U.S. gets about a quarter of its daily oil from the Gulf of Mexico. And this storm has shut down most of that production. Refineries are an even bigger problem. Almost half of U.S. refining capacity lies along the Gulf Coast. The threat of Isaac to refineries could push already rising gasoline prices even higher. Economist Carl Tannenbaum says higher fuel prices in an anemic economy could force both consumers and businesses to tighten their belts.
To the degree that they're trying and find room in those budgets for hiring more people and maybe making those investments that would really grow the economy, having to pay more for a basic commodity may delay those decisions and therefore delay us getting extra strength into the economic recovery.
And even if Isaac would take some of those Gulf Coast refiners offline for a few weeks, analysts say that demand is still weak enough that it could actually put a ceiling over gas prices.
You know, Diane,
Tom?
It's that weak demand that really makes people mad in these situations. Having gone through Isaac over the weekend here in Miami, I saw lots of lines at gas stations on Saturday and Sunday. Plenty of supply, though, and that's what people point to. Why should prices spike if demand is relatively low, but there's still plenty of oil around?
You know, Tom, it's sort of a delicate dance between the production and the refining. We saw gases spike on the West Coast earlier this summer because there were a couple of refining outages out there. So, again, it's sort of a delicate dance, and it's very difficult to move production from one refinery to another. So if they're short on supplies on the West Coast, it's very difficult to just move refining production out that way. You know,
Diane, we're entering the threat of Isaac here with gasoline inventories down about 4% nationwide, down 10% on the East Coast. This really continues to add to the pressure that the refinery business is in. You mentioned the West Coast situation. Then, of course, there's the explosion, the deadly explosion that we saw in Venezuela at a key refinery there. Yeah, and that's the fear that, you know, if we have this issue down in Venezuela, we have the storm heading towards these refineries on the Gulf Coast, you know, what are we going to see? We saw something very similar happen during Katrina 10, 12 years ago. We could see the same thing happen that we saw with Gustav and Ike back in 2008. And it's a very delicate situation. So, you know, we'll have to watch what happens. Separate from the threat to life and property and energy along the Gulf Coast, what about the chances for rain in the Midwest and quenching some of the drought conditions we've seen? We actually did see some rain here in the Midwest yesterday. That could help the soybean crop, but it's very doubtful that it will do much for the corn crop. That crop is pretty much gone. We've seen a lot of farmers grinding that up as silage. So it may be beneficial, the rain and the cooler temperatures for soybeans, but probably not so much for corn. Watching grains, golf, and gasoline tonight, it's our Midwest Bureau Chief in Chicago, Diane Estabrook. Thanks.